Businesses waste an average of 14 to 23 hours every single week on manual accounting processes, and that's costing you between $35,000 and $50,000 in lost productivity annually. If you're still copying data between systems, chasing down receipts manually, entering invoices, calculating payroll taxes by hand, you're working like it's 2015 and not 2026. And here's that's really costing you. Not just time, but visibility, control, and scalability. Today, we're breaking down the top 5 financial tools that every business should consider to help them succeed in 2026. We're talking about businesses growing from $2 to $20 million in revenue without proportionally adding headcount or more resources. We're talking about Sage Intacct, Ramp, QuickBooks Online, Bill.com, and Gusto. And no, you don't need all of them, but you need to know which ones are right for your business stage. By the end of this video, you'll know exactly which tools to implement first, which each one actually costs versus what it saves you, and the one integration mistake that kills 80% of automation projects. If you're interested in staying on top of financial tech like this, or tax and business strategies overall, hit subscribe. We break down one strategy like this every week, and trust me, what I'm covering about Ramp in about 4 minutes is going to completely change how you think about corporate spend. But first, you need to understand why your current financial stack is probably costing you more than you think. Here's what we see in so many new clients that we work with. They've got QuickBooks, maybe your corporate card, some version of bill pay, and they're running payroll through something. Everything feels fine until we look under the hood. Their bookkeeper is spending 12 hours a week doing data entry. They can't see their cash position in real time. Month end takes 2 weeks. When they need financial reports for a loan or an acquisition, that's when everything falls apart. Research shows that 56% of companies spend over 10 hours per week on manual accounts payable processing. That's 520 hours a year, the equivalent of hiring a full-time person just to push invoices through your system. And here's the kicker. The average cost to process a single invoice manually is around $15. So if you're processing just 100 invoices a month, that's $18,000 a year in pure processing costs. But it actually can get worse. About a third of small businesses spend more than 6 hours each month handling payroll manually. And 53% of companies have been hit with payroll penalties in the last 5 years from non-compliance. The problem isn't that you don't have the tools, it's that you have the wrong tools for your business stage, or the right tools aren't talking to each other. So let me show you exactly what a modern financial tech stack looks like. Here's something that's probably going to make some of you mad. If your business is over $5 million in revenue and you're still on QuickBooks Online, you may be outgrowing it and you don't even know it yet. Now, before the comments explode, QuickBooks dominates the market with around 62% share for a reason. It's phenomenal for simple businesses that are operating under $5 million, and it's affordable, it's user-friendly, and every bookkeeper on the planet knows how to use it. But here's what they don't tell you. QuickBooks was built for bookkeepers, not for CFO-level decision makers. You can't do multi-entity accounting well, department tracking gets messy fast, custom reporting, well, you're wrestling with Excel reports there. The moment you need to consolidate multiple entities, track projects across departments, or produce board-level financial reports, QuickBooks can become the bottleneck. And here's the data. According to Intuit's own 2025 Small Business Index, businesses using digital tools for more than 2 areas of their business saw confidence in sales projections jump 54 to 65%. That gap, that just happens when you have visibility. So here's my take. If you're under $5 million in revenue, QuickBooks Online is perfect. But if you're scaling past that, or you're managing multiple entities, you need to start planning migration to a system like Sage Intacct before your lack of financial visibility costs you a growth opportunity. So let me break down all 5 tools and when each one makes sense. Let's start with QuickBooks Online. Typically, it can cost around $30 to $200 per month depending on your subscription level. For businesses between $500,000 and $5 million in revenue, QuickBooks Online is still the gold standard. It integrates with virtually everything, your bookkeeper already knows how to use it, and the cost is really hard to beat. The key is knowing its limitations. Use it for core accounting, like AP, AR, general ledger, basic reporting. Don't try to make it do things it wasn't designed for. But here's a pro move. Even if you're on QuickBooks, you should still be using the next 3 tools I'm about to show you. First, let's start with AP processing with Bill.com, around $45 to $70 a month. This is where many businesses see immediate ROI. Bill.com connects to whatever accounting platform you're using and automates your entire accounts payable and accounts receivable process. According to Bill.com's own data, customers save an average of 50% of their AP time. Remember that 10 hours per week spent on AP that we talked about earlier? Cut it to 5 hours instantly. Here's what that looks like in dollars. If you're paying someone $25 per hour to process bills, that's around 260 hours saved annually, which equates to $6,500 in direct labor savings. And that's before we talk about the reduction in late payment fees, duplicate payments, and fraud prevention. The approval workflows alone are worth the subscription. Your vendor sends an invoice, it hits bill.com, routes to the right approver automatically, and once approved, you can pay via ACH, card, or check via one click. Also, it syncs with your accounting system, so there's zero double entry. Zero double entry. When we're talking about payroll, this is an area of the business that we see many companies make expensive mistakes. If you're still calculating payroll manually or using some half-automated system, you're playing Russian roulette with the IRS or the states, and the stakes can be higher than you think. Gusto customers save on average 100 hours per year on tax and compliance work alone. That's almost 2 hours every single week that you're not spending calculating withholding, filing quarterly reports, or panicking about W-2s. But here's the real value. 53% of companies have faced payroll penalties in the last 5 years from non-compliance. The average penalty can range from $845 to $2,400 per incident. You get hit with that twice, and you've spent more on penalties than 5 years of Gusto subscriptions would cost you. And here's a stat that could terrify every business owner. 50% of employees will start looking for a new job after just 2 payroll errors. You know what it costs to replace an employee? Conservatively, around 50 to 75% of their annual salary in recruiting, training, and lost productivity. So when you're paying $500 to $600 a month for Gusto to handle payroll for a 10-person team, you're not just buying payroll processing. You're buying compliance, insurance, and employee retention. It integrates directly with QuickBooks and Sage Intacct. Payroll syncs automatically. Tax filings happen without you touching anything. And you get access to real-time compensation benchmarking, so you know if you're paying competitively. Now let's talk about Ramp, the profit protector. Okay, this is the one I promised you. And honestly, it's the biggest game changer in the financial tech stack. Hold tight, because this is where we talk about something most business owners completely miss. All corporate cards are not created equal. And the one you're using right now, if it's not Ramp, is probably costing you more than it's making you. Here's what I mean. Traditional corporate cards like American Express or Chase give you 1 to 2% cash back. Cool. Ramp gives you up to 1.5% cash back, but here's the game changer. They save you an additional 3.3% on your spending through automated expense management and spend controls. Ramp says its customers have collectively saved over $10 billion. That's a billion with a B. Not from rewards, but from eliminating wasteful spending that they didn't even know was happening. Here's how. Ramp has AI that flags subscriptions, catches unusual spending patterns, and shows you benchmarks against similar companies. One client we were working with realized that they were paying the same project management subscription 3 or 4 times across their team. That's the same subscription used once, but paid for 3 or 4 times before they implemented Ramp. With Ramp, you get real-time visibility into every dollar spent. Your team can't access anything without a virtual card that has built-in spending limits or category restrictions. You have a lot more control over that spend before it happens. No more surprise $500 dinners that you find out about at month end. So what's the ROI? If your business spends around $50,000 a month on your card, you're earning $750 in cash back, plus potentially saving another $1,650 in eliminated waste. That's $28,800 from switching your corporate card alone. The setup can take around 15 to 30 minutes, and it integrates with a lot of accounting systems like QuickBooks and Sage Intacct. Expenses auto-categorize, receipts attach automatically, and month-end close shrinks from 2 weeks to 2 days. Now you might be thinking, I'm a small business, but I'm starting to outgrow some of these tools. Well, hold that thought, because the 5th tool we're about to talk about is specifically designed for companies that are outgrowing QuickBooks. Let's talk about Sage Intacct. This is the tool you graduate to when you're serious about scaling. If you're over $5 million in revenue, managing multiple entities, have complex revenue recognition, or need real-time financial dashboards, Sage Intacct is where you need to be. And yes, it's more expensive. Pricing can start around $1,500 a month and scale materially from there. But here's the ROI that no one's talking about. A Forrester study commissioned by Sage found that companies implementing Intacct saw an average ROI of 441% over 3 years. The composite company in the study gained $1.7 million in quantifiable benefits. That's not from some huge enterprise. That's from businesses just like yours. Here's why. Sage Intacct gives you dimensional accounting, which means you can slice your financials by department, location, project, or pretty much any custom dimension. You can consolidate multiple entities automatically. You can create custom dashboards that show real-time profitability by service line. And when you're raising capital, pursuing an acquisition, or going through due diligence, This is the system that makes you look like you know what you're doing. The typical implementation can take around 3 to 6 months, and yes, you'll need an implementation partner, but businesses that move to Intacct typically reduce their month-end close time by around 50% and their financial reporting time by 75%. Okay, so you're probably wondering, which tool do I start with? Here's your decision tree. If you're under $2 million in revenue, start with QuickBooks Online, Bill.com, and Gusto. That's your foundation. The total monthly cost for a 10-person team will be around $600 to $750, and you'll save immediately on AP and AR processing time, eliminate payroll compliance risk, and have that system that scales with you to $5 million. If you're between $2 and $5 million, add Ramp to that stack. QuickBooks plus Bill.com plus Gusto plus Ramp gives you automation, visibility, and compliance with the cost savings. If you're over $5 million or managing multiple entities, well, it's time to plan your migration to Intacct. Keep Bill.com, Gusto, and Ramp. They integrate beautifully with Intacct, but upgrade your core accounting system before your lack of visibility costs you a growth opportunity. Now, here's one mistake that kills implementations. The biggest mistake I see: businesses implement these tools one at a time without planning how they'll talk to each other. Integration isn't an option anymore. It's everything. We had one client come to us after spending $30,000 implementing Intacct, but they never connected it to their bill pay system, their payroll platform, or their corporate card. Their bookkeeper was still manually entering 200 transactions per month. They paid for automation and got zero benefit. Here's what we did. We connected Intacct to Bill.com for AP automation, and then we integrated Ramp for automated expense management and linked Gusto so payroll synced automatically. We set up approval flows that matched their organization structure and built dashboards to make sure they had real-time visibility. Month-end close went from 3 weeks to a month to 4 days. Their bookkeeper went from 100% data entry to 80% financial analysis. And within the first 6 months, they realized they didn't need a full in-house team costing $180,000 to $250,000 to get them the reports they need because the automations were working. They reallocated this team to help them identify opportunities and run the business more efficiently. So here's your action item. Before you implement any financial tool, ask yourself, what is this replacing and what does it need to connect to? If the answer is, I'll figure that out later, you're probably setting yourself up for failure. Here's your next step. Look at your current monthly spending in these 4 categories: accounting software, bill pay, payroll, and corporate cards. Add up what you're spending versus what you're saving. If that number doesn't make sense, it's probably time to upgrade your tech stack. Now, if you have your tech stack optimized and you're interested in how to analyze your financials to run your business more efficiently, be sure to watch the video that's linked at the end of this tip. And if this video just saved you from wasting thousands of the wrong tools, hit subscribe. We break down one financial strategy like this every single week, and it tells YouTube to show more videos like this to business owners that are still manually calculating payroll taxes like it's 1999. Talk to you soon.